The global financial crisis and subsequent recession has had a negative impact on protectionism. Chad Bown, associate professor of economics at the Brandeis University International Business School, just released research finding an increase in the use of import restricting policies. He joins us now from Waltham, Massachusetts, with his thoughts and findings. Thanks for being with us.
Thanks for having me, Gigi.
Chad, in the wake of the global economic crisis, countries are imposing these new protectionist measures, some trade remedy policy instruments like anti-dumping and safeguarding. What does your research show is the trend among these measures?
So first, let me tell you a couple of things about the research. So it's a collaborative effort that has been undertaken, sort of a wiki-type effort between researchers at Brandeis, the World Bank, and funded by also the UK's Department for International Development. And what we do is we go out and collect national data on countries using these kinds of trade policies that you mentioned, anti-dumping, safeguards. And so what these policies are is you have a domestic industry, say it's a group of steel makers or chemical companies or tire producers that are hurting. They're suffering, and they go to the government and they say, listen, demand for our product is down. Our capacity is sitting here idle. We've had to lay off workers. We need you, the government, to step in and to stop imports from coming in and help us out. So we go out and we collect data for 20 of the world's largest economies that all use these types of policies and track it over time. And so what we found is, not surprisingly, associated with the crisis, the global financial crisis, that countries are increasingly using these kinds of import restricting trade barriers. Starting in 2008, well, I should say that 2007 was the historical low, so we're starting from a sort of low base period. But in 2008, countries use these 35% more frequently than they did in 2007, and our research, looking at the numbers so far in 2009, suggests that this has gone up by another almost 20%. And that's just the industry demands for new trade barriers. When we look at what happens to the trade barriers being imposed, the way these investigations typically work is, the governments, after they get these requests from industries, they have to go out and collect data and do investigations, and usually it takes 12 to 14 months before they make a final decision about whether they're going to impose new trade barriers. So the decisions they're making today are really the result of...
Chad, I'm going to have to interrupt you. This is
Sure.
very interesting, but we're going to bring you back after this commercial break that we have to take. We'll be back with protectionism expert Chad Bown in just a moment, so stick with us. Let's bring back Chad Bown, associate professor of economics at the Brandeis International Business School and author of several studies on protectionist trade policies. So is protectionism going to get better or worse?
So that's a really good question, and there's really two parts to the answer. The first is, in the near term, it's likely going to get worse. So we've had a spike in these new investigations that have just been getting started, but there's a 12 to 14-month lag period before when the new trade barriers get imposed. So we're just now starting to see some of the new import restrictions go on, and we expect to have that continue on throughout the end of this year and at least into next year as well. What's going to happen, and the second part of the question is what's going to happen in terms of new investigations? Are industries going to continue to demand this kind of protection? And that we don't know. There's historical evidence that we should expect to see this from noted economists like Tom Prussia at Rutgers University and Doug Irwin at Dartmouth College, that we can expect to see these kinds of things, but we'll have to wait and see how it plays out.
Okay, well, the big news of the day, of course, is U.S. and Chinese officials meeting on issues like trade. Is China a major target of import restricting policies, the ones that you were just talking about?
Yeah, it's likely that they're talking about these issues in the dialogue today because China is by far the biggest target, not only for the United States, when the United States is using these kinds of trade restrictions like anti-dumping, but for the entire world, really. So one way to look at the numbers is to ask yourself the question, out of all of these cases that get started, how many times does China end up being one of the targets that gets named? And in the 2009 data that we're looking at, it's 75% or more of the cases that get started, the industries are looking to target imports from China. So that's a really big concern from China's perspective.
And a concern from our perspective, do you think trade barriers are going to impede the recovery for the U.S.?
I think that is a potential concern. So far, in looking at the data and trying to see how big of an issue these kinds of trade barriers are, anti-dumping, safeguards, to be realistic, the numbers aren't large. So for the United States in particular, if we match up trade data to the trade policies that are potentially being imposed, we'll see that it's only less than 0.4 of a percentage point of imports that are going to be affected by these things. So it's not a large amount of imports. The big concern is that these calls for protection keep going forward, and that new trade barriers keep getting imposed, and this does impede the ability of the economy to grow out of the current crisis. Okay. Just like the protectionism of Smoot-Hawley in the 1930s didn't cause the Great Depression, that's what we're seeing today. The protectionism today didn't cause the global financial crisis, it's the other way around, but it could impede our ability to grow out of it.
Okay, it should be interesting to see what happens with those protectionist measures. Chad Bown from Brandeis University, thanks for explaining that to us.